Welcome to the third video in our series on job costing. In this video, we are going to look at the recording of transactions related to labor. In this video, as with our other videos, we will begin by briefly reviewing how our costs flow through the accounting records. We will then look at how we record transactions related to labor. We will also have a look at some of the key documents we use during this process. Let us briefly remind ourselves how our costs flow through the accounts. First, we have our costs of direct materials, direct labor, and manufacturing overheads. Our direct materials are purchased and stored in the warehouse until we need them for production. When we begin production, our costs are then transferred to the work in progress account. Once the job is complete, we transfer the job out of work in progress and into finished goods, where it stays until the goods are sold. Once sold, we record the cost of the goods as an expense through our cost of sales. We also recognize our sales and non-manufacturing overheads. Note that the material stores, work in progress, and finished goods are all assets that we record in our statement of financial position. Our sales, cost of sales, and non-manufacturing overheads are all recorded on our statement of profit and loss. In this video, we are going to focus specifically on our labor transactions. So as a company, we employ employees. When we employ these employees, we enter into a labor contract, which details issues around salary, salary deductions, working hours, the place of work, resignation timeframes, and so forth. When recording our transactions for accounting purposes, we are most interested in the salary and salary deductions aspect. These calculations around the computation of gross pay for each employee and the calculation of payments to be made to the tax services, pension funds, etc. is known as payroll accounting. When the appropriate time comes, which could be weekly or monthly, and you need to pay your employees, you would record a transaction similar to what is on screen. You debit the payroll control account, and you will credit all the items to whom the money is owed. This would be the employee themselves, so you see that we credit our wages or salaries accrued, as well as the tax services, the government, the medical aids, and the pension funds. Note that the payroll control account is just a temporary account where we record our salaries and wages until we either expense them or capitalize them to production, which we will deal with shortly. This would be the transaction where we actually pay the amounts over to the people to whom they are owed. Notice we now debit all of our accounts which we credited in the previous journal, and we credit bank or cash because there's an outflow of cash from our business. These payments might not all be contained in a single journal, as we may pay them at different times during the month. For example, in South Africa, salaries are normally paid on the 25th day of the month, while employees' tax is only paid on the 7th day of the following month. We now move on to the second phase of recording our labor. Remember that we have accumulated our payroll costs in the payroll control account. We then look at the employees' time tickets, or time sheets, and we need to allocate the cost of labor to our work in progress account based on the number of hours they worked on jobs. We also need to be aware that some time might not be related to a specific job. It may rather be related to the factory as a whole, such as for maintenance. In such a case, we would allocate the payroll cost to the factory overhead control account. We will have a look at the factory overheads in our next video. This second phase of accounting for our labor is known as the cost accounting phase. This is an example of a time ticket or time sheet. If we look at the top portion, we see the usual descriptive details. We see information about the employee's name, the workstation at which they were based, and the department. We see a time ticket number. As with other documents we have looked at in our previous video on materials, this number should be unique and sequential. We also see the date. In the next section, we see details around the times worked. We see the time started and completed, and based on this, we will calculate the total time worked. We also see the labor rate and total amount. Our final column then is the job number. This enables us to see the job the employee was working on, and hence the job to which the costs need to be allocated. Our final section is a space for the employee and supervisor to sign, again allowing for isolation of responsibility and authorization. This journal now details the allocation out of our payroll control account and into our work in progress. This allocation will be based on the time ticket we just saw. This is the journal for allocating from the payroll control account to the factory overhead control account. Again, it will be based on the time ticket we saw earlier. However, there will be a different description under the job number, which enables us to identify that it related to the factory as a whole rather than a separate job. If we now look at our job cost sheet, we will see that the direct labor worked on the job is recorded on the job cost sheet. Notice that we record the time ticket number and the amount. Recording of the time ticket number again allows us to create the audit trail. This brings us to the end of our video on recording labor transactions. In our next video, we will have a detailed look at the recording of factory overhead costs. See you next time.